Hello, Warriors. Let's have a great week. Dale here with TradeGATEHub.com. Our sponsor is TradeView Markets. So we got some dollar stability, and last week I talked about taking out the 2380 level would be negative, which is really what happened today. And we have some great follow-through. So the headline of this particular interview is dollar stability is going to turn silver into a blue line special. So it's a little take on what you used to order at diners, their blue plate special. So here's my blue line that I've had for a long time. It sure took longer than I thought it was going to take. You know, markets try and wear you out before it happens. That's why, to be there for the good times, you have to be there all the time. So I also talked about that even gold was vulnerable. On the last broadcast I did Friday as a weekly recap, I pointed out that gold had made new highs with a reading under 70 for the first time. So here was our confirmed high back in January, and we started to diverge here, but as you see, and I do like to teach while I'm providing analysis, and this is my RSI work, followers know I've renamed the relative strength index is a real simple implicator. It's because of what the market's implying depending upon different RSI setups. So your best setups for reversals on three drives to a top or a divergent top is when you've had a couple of divergences like here. And then your new highs are followed by RSI readings under 70. You would use the inverse for three drives to a bottom, couple of divergences that may be beneath the 30 reading, and your best setup is when the market would make a new low with an RSI reading above 30. Everyone get that? So save this video as a teaching tool for how to trade divergent tops, because you can't just go with the first divergence. And your higher probability trades are when what I just said is the mix that you have going into the trade. So I really think gold is 1840 is viable on this decline. Of course, we have some areas of support, and there's going to be stop losses all the way down. They'll go for the stops under 1900. I think they'll go for these stops too. That's around 1862. So we'll see what happens around 1840, maybe it stretches to 1810. This 1810 level was a real big level down here, meaning that we would go for these 1820 stops, maybe take it down to 1810. Silver, I'm going to go with the blue line. A lot of people have counts around 22 and a half. Markets at times are like rubber bands, and they stretch further than you think. And let me coach you about one other thing. When you hear one number bandied about by a multitude of people, here's what usually happens. It either doesn't achieve that level, or that level becomes meaningless and eats through it like a hot knife in butter. So we'll see what happens down here around this blue line. Looks like it could happen in a hurry. Looking at currencies, I know that Aussie is only down 5, but it was a failing rally compared to the euro making new highs, but diverging. Another nice setup, right? Just like gold diverging. And perhaps we're headed back towards, initially we're going to have to break this 820, which held in here, but 6.5 looks viable to me. Let's take a look at a daily. A real big break would take it down to 103.76. I don't think we're going to do that. So, the 106 level is what I'd be looking for, because I still think even though we have a dollar rally that could take us, maybe back to 107, we'll take it one step at a time. I guess that could take us down to 103. That'd be 5 handles if I'm looking for 5 handles in DXY. Aussie, I believe that there's potential for this to trade down to the 66 level. Ellioticians will call this a fourth wave of lesser degree. I'd like to see a stop hunt flush under 6.6. I'd be a big buyer at 65.5 if that happened here in the Aussie. Dixie, as I said, really was its dollar stability that started last week. We tried to retest the lows. We're acting pretty good here. Next important barrier is going to be up here around 104 and then 106. The S&Ps with this dollar break might be vulnerable, but I have to respect the fact when I left you on Friday, I said 39.5 should be a level that the S&Ps have trouble with. It just blew through that Friday. And, here's some perspective. So I see better trades than short in the S&P right now, is that when we came off the trend line, of course, we made a new low here. When we had the false breakout over this trend line, this was a nice sell-off. I participated in it. But look at how it's barely coming off. Just like I was suspicious of it not doing much on the upside with a weak dollar and lower yields, I have to respect that, at least for now, this rally almost retraced this whole deal. And the fact that it only rejected off this 4,000 level 50, 60 handles. So I'm not saying that we can't do A, B, C and pull back again. I'm just saying that I'm a little bit more neutral, and now 3,900 is going to be an important level for the bulls to maintain control. Just want to touch on platinum, which also tried to rally last week and failed. And maybe we're going to see the 940 level. Anyway, it looks like two drives to the top, but high conviction trades as the gold top, I believe, is in. Silver's in its washout phase. They're going to begin a washout. That should be a nice break to buy down here in the coming days. And the dollar has some upside. The only one I didn't cover, and I still want you to be disciplined with it, as I helped you identify the importance of the 123 level last week. And we had one break and it held 23, actually did make a new high. So I caution you as well, because the BOE meets this week, and I'd wait for either side of the market, the short side of the market, until after the BOE. I don't like to be positioned into central bank rate decisions, especially now that we may be transitioning, as the market seems to think, from hawkish to less hawkish. But closes back under 123, cable's pretty vulnerable, and we might even see these lows tested again. But for now, I'd say, back to 2170, still a great trade from here. And as I said, and I really stressed this on Friday, to be patient if you're a gold bull. And we could still try and rally again, but it won't confirm. But I think your patience in waiting for bull silver, which I've been talking about for a while, to wait for this break. If you're not a counter trend trader, a lot of people aren't, but your patience is going to pay, because you're going to be able to enter the market at much better levels than looking at sentiment 80 to 90% of traders have, because most of the longs started coming in here, and most of the gold longs have been coming in since here. So you could probably also see nice pullbacks, GDX maybe around 27, 28. I'm going to use that as a rule of thumb for entering on miners. And let me just take a look at this. So that's a pretty good hit. That's about 20%, 15% back towards this level in the GDX. I'll start re-entering long miner positions. So Mike's going to be back with us tomorrow. I actually have a great interview today at 3 p.m. Don Durrett, at Don Durrett, specializes in miners. Great time to talk to him. He's a gold and silver specialist, so join us later today for Don Durrett. And remember, most of all, don't just count your pips, count your blessings. Good hunting. Hope I helped you out with the gold and you book some of your